Hi everyone, I'm Matt from Looking to Bitcoin, and today we're going to be looking at whether the 4-year Bitcoin cycle is dead. To do this, we'll be using a number of resources that are all freely available on lookintobitcoin.com, your number one source for Bitcoin information. And if you haven't already, don't forget to like the video, subscribe to the channel, and turn on notifications to ensure you're receiving all of our content as soon as it's released. So recently, especially on social media platforms, I've been seeing a lot of people potentially feeling that the 4-year Bitcoin cycle may be over. Now, the 4-year Bitcoin cycle is usually referred to because Bitcoin has followed this very cyclical 4-year pattern within its price action where we see a boom and bust cycle occur within a 4-year time period. And it's quite commonly believed that a large influence of this 4-year cycle is the Bitcoin halving event, which occurs every 4 years. So something like the stock to flow model shows this a little bit clearer, where we can see these vertical dashed lines here indicating the halving events. And we can see we have this Bitcoin boom cycle, usually following this halving event, about 12 to 18 months following this event, before a little bit of a bear cycle where we pull back and then really kind of transition from a bear cycle into a bull cycle with a little bit of upside price action, a lot of sideways price action, just leading into this halving event before, again, the cycle repeats and continues and we have this 4-year cycle. But a lot of people, like I said, are believing that the 4-year cycle may be over. They think that maybe we've experienced the last of them and maybe the Bitcoin cycles are going to extend to maybe follow more traditional market cycles such as equities, which have historically seen cycles that are close to maybe an 8 or 10-year cycle before we have a more drawn out bear market period. But is this the case? Is there any actually supporting evidence that the 4-year cycles are over? Or again, is this just pure speculation and people trying to predict things that haven't actually occurred yet? So what we can do is go over to TradingView here, and I've just got the Bitcoin price chart loaded up here on the weekly time frame. And what we can actually do is load up the Bitcoin stock to flow indicator here, which is available with a premium look into Bitcoin subscription, which I definitely recommend. And what we can do is just load up the halving events here. So we can see the next halving isn't actually confirmed yet because it's not exactly a 4-year date cycle. It works on the amount of blocks that have actually been mined that typically result in a 4-year cycle, but we can see this is just an approximation for now, which is likely to occur in mid to late April 2024, so less than a year away. But what we can see here is, again, the same data we could see previously on the look into Bitcoin stock to flow model. But what we can also do is potentially add in the stock to flow oscillator to get a better indication of maybe how the stock to flow model relates to data within the 4-year cycle. And what I've also done is copied the bar action, the price action after the halving event, so we can actually overlay it on the current data to see if we are actually following a 4-year cycle or if something looks different that's maybe leading people to believe the 4-year cycle may be over. So I've just removed my face temporarily because it was a little bit in the way. What we can see here is looking at the Bitcoin stock to flow oscillator, we tend to hit these halving events pretty much bang on the predicted stock to flow fair value amount. But in the earliest halving event in 2012, this wasn't actually the case. We actually reached this halving event at a price substantially lower than the stock to flow predicted fair value. Actually a value that we're pretty much sat at right now when looking at the stock to flow oscillator. Like I said, in previous cycles, we did actually reach this stock to flow fair value figure just prior to or at the halving event. But if we just zoom in on the most recent cycle, we can see here that it's actually looking fairly in line with what we've seen historically. This orange line is the second halving event just following the 2016, and I've just overlaid them to the most recent halving in 2020 so we can see how price action actually compares. And we can see it doesn't actually look too dissimilar. I know there are potentially diminishing returns. We're not seeing substantially higher highs and we may be seeing a little bit lower lows than we may have seen previously, but ultimately we don't look too far away from where may potentially be considered fair value or in line with what we've seen previously. Especially if we were to potentially mimic the previous cycle, we could see prices at around $40,000 to $50,000 at the time of the halving. If we were to follow the actual stock to flow model pricing, we could see values of around $55,000 to maybe even $60,000 at the time of the halving. But ultimately, we haven't seen any evidence yet that the 4-year cycle is over. There is, however, some evidence that the 4-year cycle may be ending. I mean, it's probably an inevitability that at some point the 4-year cycle isn't going to line up exactly with how it has historically, just because as Bitcoin grows, matures, and just extends its life cycle over the course of decades and decades, it's very unlikely that we're going to continue the exact same pattern of price action. Number one, it's just frankly a little bit too predictable, and usually the market punishes predictability, especially as soon as a lot of people share the same thought process, have a similar predictions. Usually the market wants to punish as many participants as possible. So as soon as every single person is expecting a 4-year cycle, then maybe that's the time when the 4-year cycle ends. But if we look at something like the MVRV score, which is looking at the relationship between the Bitcoin market cap, which is the current price multiplied by the circulating supply, and the realized cap, which is the average transactional value of each Bitcoin on the network, again multiplied by the circulating supply, so we could see the actual accumulation price and how that actually relates to the market cap to see how many holders are either in a profit or potentially at a loss on their positions. So once we divide that by the standard deviation, we get this MVRV score. And what we can see is we're actually seeing a little bit of a convergence in this. So we can see the peaks that we're seeing on this score are actually contracting. We see these values decreasing with every cycle peak. And similar to the downside, we are seeing these value lows steadily increase, which is giving a little bit of an indication that maybe Bitcoin, again, as it grows and matures and the market cap increases exponentially and the capital inflows required to make substantial moves in the market vastly increases, we may not see as exponential price rises or catastrophic price decreases. We may see something where the MVRV score comes up, and maybe this time it doesn't actually reach this upper red boundary level, it just reaches this decreasing trend line that the previous cycle peaks all line up with. But maybe this isn't going to decrease quite as substantially, and as we get this less volatile, less speculative price action within Bitcoin and the cryptocurrency cycles, maybe they extend outwards and we see a much longer market cycle process, especially as the halving events have substantially less of an impact on miner revenue. If we look at something like the Puel multiple, we can see a very similar pattern here with decreasing peaks. But as the halving event decreases the inflation rate of Bitcoin by 50%, obviously this is having a huge impact on miner revenue. But within the next few decades, when we see the halving event decrease the Bitcoin block rewards only a negligible amount, the difference between block rewards going from over 6 BTC to nearer 3 BTC is quite a substantial decrease. However, once the halving events have really come into effect and have extended over a very long drawn out period of time, once the block rewards decrease from one fraction of a Bitcoin to a slightly smaller fraction of a Bitcoin, maybe it's not going to have as drastic an impact on the Bitcoin price. So the only way I'd really fully buy into the fact that we are seeing a break in the 4-year cycle, the traditional 4-year cycle that we've seen in the Bitcoin price, is if we either see a massive decrease in the Bitcoin price prior to the halving event, or we don't see Bitcoin increase to new all-time highs a year to 18 months following this event. So sometime in mid to late 2025. At that point, if the Bitcoin price still is yet to reach an all-time high, maybe that is a true indication that the 4-year cycle is over, especially in the future where it's almost an inevitability as the mining reward decreases generally have less of an impact. It is, like we said, of course going to happen at some point, but that doesn't mean there won't still be boom bust cycles with the Bitcoin price action. You can look at any market where people can trade and investor emotions are the number one thing that drives prices to the upside and the downside. Fear and greed, people trying to maximize their profits and people trying to minimize their losses. There are always going to be people that are being greedy in the market, and there are always people that are going to be very fearful with their investments. So there will always be boom and bust cycles like there is in any asset class. But for now, I don't see any concrete evidence that we should look away from the 4-year cycle, at least until we actually see some signs that that may be the case. So just to summarize, as Bitcoin grows and matures as an asset class, and potentially as we see a potentially recessionary period or a drawn out bear cycle in traditional markets that a lot of people are anticipating, many are speculating that the typical 4-year cycle we've seen for Bitcoin and the cryptocurrency markets may be over. It is almost a certainty that the 4-year cycles will end at some point, potentially due to minimized halving impacts or external market and macro factors, but investor emotions will always result in cyclical boom and bust cycles for the Bitcoin and cryptocurrencies price action. However, we are yet to see any actual evidence for the 4-year cycle ending yet. It's all just speculation, and we're better off reacting to data than predicting to things based on emotion, based on gut feeling. Here we try and work off data, keep our biases in check, and just react to the actual facts, the actual evidence, rather than just wild speculation and our own personal opinions that for a majority actually lead to decrease in profits and performance. If you like this video, then please visit lookintobitcoin.com, where you can also consider becoming a site subscriber to get access to live charts, in-depth newsletters, indicator alerts, private trading view scripts, and more, all for a fraction of the standard industry price. And as I've mentioned previously, in the coming weeks and the coming months, we're going to have a lot of great new data points and charts going live. So I definitely recommend checking Look Into Bitcoin out. And let me know in the comments down below and on social media, do you think the 4-year cycle for Bitcoin and cryptocurrencies is over? Or do you think that this is just, again, wild speculation, and for now we should still focus on this likely being the best case scenario, because ultimately that's what the data is pointing towards? As I said, let me know. I look forward to reading and replying to all of them. Thank you very much for watching, and I'll see you in the next one.